What is going on? Today we are going to break down how to do a full top-down analysis and in turn how you can align your higher time frames with your lower time frame entries, which gives you the highest probability trades. First, we are going to do some chart talk before we go to a real example. So my entries are broken down with BSE, bias structure entry. Bias structure entry. With this, I use this chart. I'll draw this out for you real quick. So this chart can be used to align your time frames. It'll make more sense when we look at a real chart example. But first we're going to go, so our bias, let's say we have a daily bullish bias. We're going to look for structure, our 1 hour, to be aligned with that. And then finally an entry, what aligns with our 1 hour, our 5 minute, so a 5 minute entry that aligns with those. You can also just do structure and entry. So let's say we're in a 4 hour fair value gap, we can look for a 15-minute entry. 15-minute fair value gap, 1 minute entry, whatever your entry is. But this is just a general guideline you can use to align your time frames. Another example, before we do hop onto the chart, I'm just going to draw this out real quick. If you want to screenshot this here real quick, go for it. We're going to get rid of that. Let's say we are in a high time frame uptrend here. Ideally speaking, we want to trade within the trend because our expansions, our higher RR trades, our higher probability trades are going to be in line with our higher time frames. Higher time frames hold higher power. So I trade New York session. I'm assuming a lot of you guys do too if you're watching this video. What we want to see is, let's say our 1 hour, 4 hour is bullish and we are printing bullish PD arrays, fair value gaps, order blocks. What we want to see is, let's say, maybe a 15-minute break of structure or 15-minute retracement bearish. We want to see the market move lower before it goes higher. If we wanted to short, we want to see the market move up before it moves down. In this example, the lower price, the more of a discount it is to buy. Day-old equilibrium. Well, that's not it. Anything below our equilibrium point, good buying price. Again, ideally, we see some form of manipulation as well. So, bullish uptrend on our higher time frames. Middle to lower time frames, we get retracements towards those higher time frame PD arrays. Ideally at market open, because we have new money coming into the market that brings manipulation, and that our entry can be on a lower time frame than that. So let's say 4 hour uptrend, 15-minute retracement, tap into a 1 hour fair value gap, we can look for a 5-minute entry. This gives us a more precise entry, but we can still target all of these highs. So when we have this middle to lower time frame reversal, this gives us internal liquidity that we can target. I always like targeting our low-hanging fruit rather than our swing highs. Now I'll leave a runner on, but I always do say take your profits, don't give them back. You're in profit, you had a good trade, take it. Don't get greedy. So we're in a downtrend. Time frame doesn't matter, time is fractal. So whatever time frames you trade, these concepts can be applied. This is just my example. Anyway, we see a higher time frame downtrend here. We see a lower time frame than that reversal into a higher time frame. I like fair value gaps. They show. So our job as smart money concept traders is to find the clues and the footprints of big money in the markets and hop onto their saddle and ride the wave with them, because big money is what moves the market. So using a fair value gap shows heavy buying or selling pressure. A lot of money is needed to cause the creation of a fair value gap. A lot of money is needed to move these markets. So you need to wait for the signs of these big players to have entered the market and then hop on their wave. So reacting to price, not predicting. So from here, on a lower time frame that is still in line with our higher time frame, we can look for entries. break of structure, fair value gap, change of the state, inverse, whatever you trade. Next, we are targeting these internal lows. And yes, you can target these swing lows, like I said before, but don't get greedy. Take your profits. Let's hop onto the chart, see what this really looks like. Start on our daily. So what do we got here? Wednesday, the 26th. So, our top-down analysis. Daily, what do we see here? We are disrespecting bearish PD race and creating, disrespecting bullish PD race, this bullish fair value gap, we just inversed it, and creating bearish PD race. Structure is not the only thing we're going to look for. Yes, we have broken structure to the downside. We're experiencing very bearish order flow. But another great tool is just looking at the order flow. Looking at, we're creating bearish PD race. Look at this. Price is within that, and we're respecting it. Now, we look left. Bullish fair value gap. We have taken these lows. Do we care about that? Yes. But we're not going to worry too much about it because when price is in a heavy downtrend or heavy uptrend, but in this case we're in a downtrend, we are more likely to respect bearish PD raise and disrespect bullish PD raise than we are to disrespect bearish PD raise and respect bullish PD raise. That can be used both ways. So we see we're in a bullish fair value gap. Keep that in mind. But does that mean we're automatically going to reverse? No. This is old order flow. The most recent order flow is the most important. So from here, again, mark fair value gaps, mark highs. We just took this high. That's probably our high right there. We're going to jump down onto our 4-hour chart. Bring this up. Again, market replay is going to be a little bit awkward. But what do we see here? Our 4-hour is now retracing. We are generating liquidity. We've created a bullish fair value gap. Not too worried about that because my bias is bearish. Not too much going on this chart. Kind of messy. We have wicks and, but again, marking highs, lows, fair value gaps, order blocks, whatever concepts you trade. Hopping down onto the 1-hour chart. Let's bring this up too. We now got a big expansion down. Broke structure on the 1-hour. Look at this. We're within a bullish fair value gap. Does that mean we're going long? We have to go long. No. Let price do its thing and react. One time frame lower, 15-minute. Broke structure there. We're delivering from this order block here. So yes, we disrespected this fair value gap. Not super concerned about it. Accumulation block, order block. That tapped us into a higher time fair value gap, swept liquidity. So obviously a lot of selling pressure out of here. Now we have tapped back into it. And pre-market is pushing us lower. Again, bullish fair value gap, not super worried about it. Retracing. We're going to jump onto our 5-minute, going in a market open here. Look at this, bearish fair value gap. They printed a mini bullish fair value gap. Don't care about it. So let's see what price wants to do at market open. I would love to see some internal manipulation this high, and then get maybe like a 1-minute change in the state entry here, and we could just target low-hanging fruit. Although yes, our overall higher time frame is bearish, we can target, these lows. I would still rather just take profit as early as possible. So, leave a runner, and you don't want to be leaving yourself short, but you do want to be taking profit. So let's do a market open. Took a low or high there, excuse me. Perfect. Look at this. You know what some people did here? 1-minute fair value gap. Long. Because they see the most minuscule fair value gaps and assume we're going to respect it. This is why a high time frame top-down analysis is so important. Because look, we got an extension up. I guarantee you some people got trapped long here. But we just inverse this. This is a textbook short entry here. We tapped fair value gap, swept internal highs. Look at this accumulation right here. Manipulation at market open. Our time and price are in line. That gives us the highest probability setups. And now we just broke structure and inverse this fair value gap. That is enough for me on the 1 minute chart to take an entry. Let's see what happens. Big extension down. Now, let's say you don't like the inverse fair value gaps. You trade break of structure fair value gap. I would advise you learn how to scale in your entries, because when you have high probability trades, high probability setups like this, price, I'm sure you've seen it, price leaves without you. You had your bias correct, you had a great draw on liquidity, and you didn't get your entry. Because when you have high probability setups, price moves swiftly, price is expansionary, and it will leave without you. So here, we might get a retracement. Let's see if we do. On our 5 minute, huge extension out on our 5 minute. This leaves us a nice order block here. I bet you this lines up decently. Not bad. With our 0.62 fib level, you can go equilibrium here. See if we do get a retracement. Not quite. You do have this 1 minute fair value gap. I personally will not take anything below our equilibrium. I'm shorting. I would have liked to see us come up to this order block in our 0.62. We still might. No. Ripping down. So here, honestly, I'm probably taking most of my position off here. I do not like giving money back to the market. Yes, it is good to hold your runners. And look at this. All of our targets got hit. Again, on big wicks, especially at swing lows. Not as much. I don't really care about wicks and internal lows or highs. But big wicks can be treated the same as like, oh, this should have even been drawn there, as a gap or a price inefficiency, especially at lows or swing lows, swing highs. But yeah, beautiful trade here. And that is exactly how you align your time frames. If I had not aligned my time frames and I was not confident in this, I might have wanted to see a 5 minute break of structure here, which I don't blame you. 5 minute break of structure, retracement, super common entry. Look what happens. You do not get an entry. Price leaves without you. Now, you could have waited and gotten in long here. We came into this, I think, daily fair value gap, swept swing lows. You probably could have gotten entry here and here. Is it as high probability? No, because you're trading against the high time frame structure and trend. If you are taking a reversal entry, let's say, for example, you had a fantastic entry, entered in here, stops below there. Your price target is extremely important here. You are trading against the high time frame trend. You are not targeting swing highs. That requires, especially if you're entering on a lower time frame, which typically you're going to be, you are not targeting these swing highs because that requires a high time frame reversal. You are not predicting a high time frame reversal off a 1 minute inverse fair value gap. You are targeting a unfilled 5 minute swing high, or excuse me, internal highs and lows. Order blocks where price is likely to retrace to, but we are not expecting a huge reversal and targeting all these highs. If you are trading within the trend, that is why you can target these swing lows. It is all about context and understanding the higher time frame trend and aligning that with the lower time frame. So that is all I got for today. I hope it was helpful. I hope it made sense. If you do have any questions or want to see anything broken down, feel free to drop a comment below. I'd be happy to help. Until then, thank you for watching.